Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended a very volatile week where the equity market is all over the place in the Wall Street, and volatility has started moving higher, as I have been saying in my last couple of videos on this weekly market report, USA weekly market report series. And this week you can clearly see an example where a good news is extremely bad, or good news for the economy is extremely bad for the stock market. So let us now analyze what has happened in the last 1 week as far as Wall Street is concerned, and what will probably happen in the upcoming week. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, if you are looking at this chart, you can clearly see US unemployment rate falls to 3.5% in September. Payroll rises by more than 250,000 or 260,000 as jobs market stays strong. I'll show you the chart of this is the US unemployment rate chart, and this is clearly indicating how a good number. It simply means because the unemployment rate is extremely low and job market is buoyant, it simply means that Fed is going to be on the interest rate hike path, which is not at all good for the stock market, because the perspective with which I am analyzing the stock market, or my viewers or anybody who is in the stock market, they will see how the stock market is going to react. This will be a good number if the inflation rate was low, but that's not the case. Inflation rate is extremely high, and so that the interest rate hike. If the situation was not there, this data can create a big 1000 or 1500 point rise in Dow Jones, but situation is completely different. So different scenarios, and that's why in most of the times stock market works well with bad data and it's very less that the stock market works well with the good data. So this is one of the important thing which an experienced know, but a naive don't know about the stock market. Okay, so another thing that you need to look at this geopolitical scenario, and every week I'm just coming and saying specifically for US weekly market report series that I wish and pray that the normalcy comes very soon or as quickly as possible, and we will move towards the road of peace, with a pace, I would say it. So let us see what will happen. But this war and all these things, and when a global exporter which is controlling the 20 to 30% for the products and services they are offering across the globe, and if they are in geopolitical scenario, things will definitely gone wrong, and everybody who is involved across the globe will get impacted, and that's the scenario. And I wish normalcy will prevail. So let's hope for the best. Apart from that, we will talk about the stocks and all those things, and but it is very, I would say, surprising for me that you will see lots of news regarding the current US government, but talking about the economy, and they are coming in front and doing some fiscal measures and all those things. It is so surprising that in a scenario like that, it's all that Fed is doing and continuously tweaking the monetary rate. So they are trying to mend the economy with monetary measures or monetary policies. So it's very beyond a certain point, nothing works. So it would be a fine, or it has to be a fine balance between fiscal and monetary policies. So this is very surprising, because beyond a certain point, your monetary policy have the ability to crumble the economy like a pack of cards. So this is the way they are going. It's not like economy will go into recession and will bounce back with a V or K shape or U shape. This is not going to happen at this time. If the economy goes into recession, it will take years before, because you cannot simply print money. Obviously the chances are more that they are going to do the same kind of QE with different, same person with different shirts. It's like that. So they are going to do the same kind of thing, but we have to see. We literally have to see. Apart from that, every company now started giving some uh, worry signs. So I don't want to go into each and everything. That's why we will focus ourselves to the overall market, which will give us a basic idea about the things which is happening and which are going to happen. So market has again turns volatile, and obviously this data, this job data, if it is strong, so market will absorb it in the next couple of sessions. It won't be a worry. The worry will be how monetary policy is going to happen moving forward, and what fiscal measures which will really help the US economy are going to take by the government. It's not about populist measures, it's about measures which, people may feel it is bad for them, but it can work well for the economy. Those kind of measures I'm talking about. Apart from that, Bitcoin falls after the job report, but crypto prices show relative stability. I have a real doubt on it because the charts are not indicating anything like that. We will definitely analyze Bitcoin in this session as well, just to give you a flavor of crypto and just to explain you how or what the chart is saying. It does not matter what people are saying, because chart is anyways indicating or giving you a cumulative view of a set of people, and if it is on the downside it will go down, if it is on the upside it will go up. So I think this is the most part of it. So now let's go to the market and US market, and let's see the summary. So last Friday was pretty bad. NASDAQ falls 3.8%, 420 points. Dow Jones has fallen like more than 2%, and cumulative impact on S&P. Gold is showing extreme strength, and this extreme strength is because there is a big chunk. So for gold there has been a big chunk which is taken away by the crypto, but since crypto crumbles, I think that some of them will definitely come back to the gold. So gold, and last week also I have said the same thing, that it is now trading at the support and things will work well. So gold is now, I think it is $30 up. Last week it was 1670, this week it is 1700. So it's a $30 move that has happened in gold futures. Apart from that, oil moves up because of geopolitical crisis and OPEC plus non-OPEC. So these kind of things are happening and makes the oil volatile. Also, the treasury yield is on the upside. The VIX has started moving higher, so most of the things are looking negative. But let me tell you, these are extreme volatile times, and if you think that market will go down beyond a certain point, it won't. If you think that market will go up beyond a certain point, it will also not happen. Okay, so this is not the time we can take extreme measures beyond a certain point. Stocks or index will move sharply, but that does not mean that the world is going to be or the world is at its end. This is not going to happen. What I'm more focusing on is the 3-month and 30-year, and I'm keep on saying this thing again and again. And US 10-year, because we will talk about that US 10-year, because 1 year or 2 year is very near and 30-year is very far away, so a 10-year chart analysis is also required. We will do that. And obviously the mighty dollar the mighty dollar index is strong, and there is another important number which will come next week. Let us see. If that was a bad number, it will be good for the stock market, and if that will be a good number, it will be bad for the stock market. So this is something which is going to happen. So let's start with mighty dollar and let us see what's happening over here, because after the last Friday's data, the dollar index moves from 110 to 112. So nobody can call it as a currency because it is moving like any other stock or any other financial instrument, because currencies doesn't generally moves like this. But there are certain things like traders are also very active in US dollar. It is one of the most traded instruments, so obviously huge amount of trading positions have been built as far as the US dollar is concerned. And as far as the current range or the trend is concerned, this is what we have in front of us. It has actually started moving lower, but the thing is a strong number and things turns. So what do we have here? As of now, we have our support of 110, and on the upside it will move in between 115 and 116. So this is what we are going to look at as far as dollar index is concerned. Now another important thing is US 10-year bond yield, and as you can see, it has fallen from 4% to 3.5%. so it's a big fall, 0.5%, and then again a big rise has already started. So it indicates or it suggests how strong the interest rate and, as I shown you, the currency is. And you can clearly see big moves has already been started, and a breakout has happened. Literally a breakout has happened. So if you do not recognize this, I think you should, because talking about the trend, so this is the US 10-year yield chart, and you can clearly see a breakout has happened after 2011. So after 11 years, US 10-year yield moves above 3% and 3.34, 3.5%, and now it has already hit near 4%. So this is not at all a good sign, because the next target, if you're let me show it to you. So let's go to the Heikin-Ashi, so it will give you the average price. So if it moves above 4%, it will definitely move towards 5, and here we are 5.4 or 6.6. so this will be your next range. Above 4%, the range will expand and it will move in between 5 and 6.6. so if it hits 5%, there will be a huge outflow from the equity market, because pension fund are looking for these kind of things. And US, we all know, is the developed market, and if it is giving you a 5% interest rate, okay, it's all about trading move. Once somebody grabs his or her move, they are obviously going to get benefited out of it. So 5% is indeed a big one. So things have changed, and there is a breakout which you can literally see as far as the trend is concerned. So please make sure that you are looking and working at it. Now talking about ZZ, or talking about the gold futures. So yeah, gold futures. Now if you are looking at gold futures, I have talked about it, and last week also I have said the same thing, because gold future is now trading at its support. So you can clearly see, last week I have said this thing. You can probably check my last week's video on USA weekly market report, and I have said that 1670 or 1680 it is a good support and the level is, or the trend is intact. So the same thing will probably play out where you have 1670, 1680 as your support, and on the upside you have 1920 and the big target of 2083 as far as GC or gold futures is concerned. Apart from that, we will check out the VIX, because VIX has started moving higher. So the volatility index is a very important indicator, and if it is showing that risk is moving higher, it is not at all a good sign. So this is what you can see as far as the chart or the trend is concerned. And if VIX started moving above 39, okay, above 39, yeah, you can see above 39, it will be a breakout. Okay, it will definitely be a breakout, in which case we will have 44, and then the next swing will be or in between 77 and 84. And it is very much visible if you are looking at the overall chart, or if you look at the overall history of VIX. Once it moves beyond 40, it will be a big move either on the upside or on the downside, mostly on the downside as far as the overall financial market is concerned. And because it has already moved above 30, this is not at all a good sign. So above 30 is not at all a good sign, and once it crosses 39 or 40, you will see sharp swing on the upside. Volatility will keep on rising, and things or stock market will keep on falling. So you have to keep your eyes on VIX as well. Now, talking about the equity indices, here in this case NASDAQ is trading at a very weak foot. Okay, so if you are looking at NASDAQ composite, as I told you, it is at its weak feet, and you know your recent or big support is getting or will get retested again, has already been retested. But if it falls below 10,550, you know the road towards 8,000, 7,000 or 8,000 has or will open up, and this is what we are going to look at. This is how things will looks like if it started moving below 10,550. Okay, so if it moves below 10,550, the next support we have here is 8,844. So this is something which one must look at as far as NASDAQ is concerned. Okay, and we know this is a high beta index, so it can move much faster and much bigger on both the side compared to any other indices. Talking about our Dow Jones, which known to be an index which will not move beyond a certain point, but for Dow Jones you can clearly see a breakdown. You are clearly watching a breakdown, and now officially it is official that its road towards its big support is officially opened up. So you can clearly see Dow Jones closed below the red line, which is nothing but the 200-day moving average, and we are talking about the weekly chart. Okay, because it has closed below 200-day moving average, simple moving average. Now the next support we are going to look at as far as Dow Jones is concerned, so it will be between 23,000 and 23,100. So when I'm talking about a move of nearly 20% downside on the Dow Jones, it means a lot. So be ready for some big volatility in the upcoming probably days and weeks for the overall market, because if the US market is showing this kind of downside, obviously global market will follow the soon. The only caveat I would say is bad data for economy will bring cheers to the stock market. And if economic data continues to be on the good side, if economic data continues to be on the good side, then it will definitely be a problem for the stock market. That's what I can say. Okay, so this is the current support that Dow Jones has taken. We don't know whether or how much it will sustain. So your immediate support, if you want, you have 767.70, but as I told you, you can shift it to 23,500. I have said 20,000, 23 and 23,100. Now please see that 23,500 will be your next support. So we are talking about some serious price movement. Okay, nearly 20%, 19 or 20%. So stay aware, stay awake, and don't try to do anything which you don't understand. But at the same time, I am saying this thing again and again and again. In these kind of brutal falls, you will find good and big opportunities. So try to find out stock which has better fundamental, which has cash flow, good cash flow, and they have strong business models. Okay, so let us see what lies ahead. Things are not at all looking good. Dow Jones, NASDAQ is not at all looking good. Interest rate is making new highs. Volatility indices or VIX is showing or indicating more upside, so that does not work well for the equity market, not only on the Wall Street but across the globe. So this is the end of the video. Thanks for watching.